Welcome back. Let's put the spotlight on the banking space since we have had a bunch of very iconic banks announcing their numbers. Like I told you, HDFC Bank, Kotak Bank among them over the weekend. To decode the numbers, we have with us Santanu Chakrabarti, the India analyst, BFSI, banking finance companies at BNP Paribas. Santanu, good morning. Always a pleasure having you with us and thank you for your time. Let me start with the big boy, HDFC Bank.
Thank you.
The stock itself is a bit in the green, but there are at least 10 reasons to be disappointed whether, whatever you pick other than margins. What's your first take? Just the margin increase, does it condone the miss on several other parameters?
So, Latha, the most of the bad news actually came in the pre-quarters, and incremental news on the quarterly release is what has positively surprised the markets. Now, this forms a nice counterpoint to the structure that we had last time, where the initial deposit mobilization and loan growth looked quite favorable to people, and then when the profitability numbers came in, they were disappointing. Now, look,
Okay.
the moment you looked at the fact that they had shed more than 5% of their corporate loan book in just one quarter, the fact that it would be constructive on margins was not, that much of a stretch. In fact, therefore, we had expected numbers. Numbers are actually 1.5% below what we had expected, but higher than what the street had expected. It's not surprising for us. As far as the highlights go, two things stand out for me. One, which the company itself acknowledged in its quarterly call, which is that in the last 2 years, despite fairly tough circumstances, as far as incremental market share goes in the deposit space, it would have been hard to fault HDFC. It was not HDFC's fault that, that their proportions on CASA, etc., could not be shifted too fast, because the system level numbers were fairly anemic. This is the first quarter where we can say, at least at an aggregate deposit level, the market share performance has not lived up to the standards set in the last 2 years. The other point which struck me a little bit, and I get it that this is the seasonally weakest quarter and there would have been some disruption because of elections, but CRB numbers being as low as they were, which was my key disappointment from the pre-quarterly release as well, is a little off-putting, especially given their relevance to both margin defense as well as PSL compliance.
Sorry, your abbreviations are beyond me. What did you say? CRP?
So, CRB, Commercial and Rural Banking.
Okay. You're disappointed with the growth in commercial and rural banking.
Rural banking, that was only 0.8% sequential.
Okay. So do you think that the fact that they have to make up for some of their priority sector shortfalls in individual categories, though overall they meet, of course, do you see that being impinging on their margins? Is that a long-term worry for you, or at least a medium term?
I don't want to extrapolate just one quarter's performance, but what I would reiterate is this segment is crucial in two ways, just as you have mentioned. One is the simple priority sector compliance. The other is it's a fairly high yield sector, relatively high entry barrier vis-a-vis a lot of other prime categories. And they have made so much of investments into, setting down new branches. So, from that perspective, the performance of this segment is something we have to watch very closely, because a lot of the bull thesis depends on this.
Okay. Very quickly, what's your price target and call on the stock?
Yeah, so it's our top pick within the banking space. Our price target is 2470. At least until I looked about a couple of weeks back, it was the highest on the street. And